Hello there, traders. Welcome to today's live stream. So I'm a little bit late. The microphone wouldn't connect, so running a bit behind on that front. Let's just pop some lights on for you so you can all see. There we go. How are we doing today? How are we doing? I know there wasn't any live streams last week, so hopefully I can make it up to you today. We're going to go through kind of where the hedge funds are positioning themselves and some bits and bobs. On that front, I've just taken a dollar Swiss short. So I will take you through that in a moment. But yeah, basically just trying to continue to follow this kind of potential downward trend here. I have also taken a pound yen, or I'm looking to take a pound yen move here. And I'm just looking to see how I can potentially get into this one as well, because we kind of discussed a little bit about the pound and the situation with regards to the data that's been coming out of the UK. Retail sales last week was actually okay, but I like the idea of selling pounds. Let me see where euro pound is at the moment, because that's a market I quite liked the look of. So I did have an alert set here previously, but the market obviously hasn't crossed that. So I'll be looking to, potentially jump on something there if we do see an initial breakdown. I'm holding another oil short. That seems to be playing out okay at the moment. So again, we can go and discuss that one. Some more data coming out of OPEC as well, but I'll go through the dollar Swiss one first. I'm also still along that recently just tested some highs, rejecting those highs, but my stop loss is still in profit. So we'll see if that can continue to drive higher as well, but I'm going to keep an eye on pound yen. We are at some lows now, so I want to see if it can actually either hold those lows, and then if it holds the lows, then I'm not necessarily going to be interested in that particular move there. But if we kind of break through the lows, then that's where I want to be sort of interested in that market. So I'm just putting some stop losses on dollar Swiss. Okay, so before I get into all of that, who have we got in then? So Ratish, welcome. I'm doing really well. I hope everybody is well too. Harmeet, SN, welcome. Wizzy, yeah, it's been a while. I was kind of away last week, so didn't really have the internet capacity to be able to live stream. So back this week. Actually, a little bit of an announcement, I guess. This will be my last week at Blueberry. So at the end of this week, I will no longer be here. Hi to Ibrahim as well. Hi, Dan. So hi, Rai. So next week, I'm not sure what will happen in terms of live streams. I'm still kind of communicating with the team on how that comes about. I will be doing a sort of a video at the end of the week, just kind of saying what's, where, not necessarily where I'm going to or why I'm going, but essentially just kind of wrapping up things and kind of making sure that you're in good hands. So yeah, it's been a long old journey, and I thought I'd let you guys know because my last stream will be on Thursday. So yeah, I mean, it's been interesting. I've been working with Blueberry for, I'd say, 6 years, maybe even, I think my first video was in 2019. So yeah, I've been working with Blueberry for a good while now. So yeah, we've built up a great community here. I love doing the live streams. I love kind of communicating with you guys on a daily basis and chatting to some of you away from the socials and whatnot. So yeah, I mean, it's been a good run. But yeah, moving on to pastures new. Moving on to something, an exciting new project for me. But at the same time, you know, it's bittersweet because obviously I've been with Blueberry for a very long time. So, and I've enjoyed the sort of process that we've had and the journey that we've had there. So, and well, here, saying that like I've gone already, I'm not gone yet. But yeah, this will be my sort of last week. So I thought I'd let you know. Thanks, guys. A lot of I take this as a positive. 𝖢𝖤viyi, yeah, absolutely. You know, if you want to follow me, you can come chat to me on LinkedIn. I'm usually quite active on LinkedIn, so you know, feel free to come and chat to me there. Or I rarely go on Twitter anymore. So you know, but I do have a handle. It's John Talks FX, so you can kind of chat to me there if you'd like. Or you know, if you drop me a message on LinkedIn, that I'm happy to kind of drop you a message on sort of any kind of instant messaging that you want to get a hold of me on. Thank you, Rye Guy. Is the place where we can follow you? Yeah, I'm sure you'll see me pop up on a feed somewhere. Obviously, I don't want to discuss that here right now because that'll be unfair to Blueberry, you know. And you know, I like working with the guys here, so I don't want to say anything in regards on where I'm going. But yeah, just thought I'd give you a heads up. If you kind of try and come to the stream next week, my face will no longer be there. Thank you, Ratish. Appreciate that. May continue doing a personal. I might do a personal YouTube channel on the side as well. That's something I've always kind of thought about doing, but I just never really had the interest in doing my own one. I've never really thought that, you know, people would come to see me in a weird way. Obviously, you guys come in, we have a chat about markets and we discuss ideas and stuff, which is great. So yeah, maybe I'll set up something. So yeah, but if you want to come and follow me elsewhere, you know, like I said, I'm very active on LinkedIn. So yeah, if you want to come chat to me there, feel free to do so. You can just search my name, and I'm still under Blueberry Markets on that. So maybe here we go. Maybe I can share my LinkedIn with you guys. Let me just bring this over screen actually, because so that's my LinkedIn if you want to come and chat to me over there. But yeah, let's get into it. Let's get into some markets. Let's get into the good stuff. Like I said, I'm still kind of looking at some opportunities this week. The dollar is still a weak currency. I want to try and continue to, although it's kind of at -7s. I was looking at sort of the correlation between that and current sort of US dollar, but I can't look at the. Let me just click off that for a second. I don't know if I go back on if that saves. So I'd like that to save on my CAD. But anyway, we are coming into a bit of an extreme from the commitment of trader report. So although I do like the idea of selling dollar, I'm going to do it at a lower risk for now. I think the US dollar has been at -7 for a good while now. So if we have a little look. Well, say a good while. It's only been the past couple of weeks really that we've seen it in the -7s, but it's been a weak currency for a while. You can see it's kind of traded below that zero line. A couple of outliers here and here, but it's traded below that zero line for a moment or two. So I like the idea of still continuing to sell US dollars. Do I think that's coming into oversold or overbought conditions? I do. So I'm very cautious of kind of continuing to get on the back of that. But obviously there's key data coming up this week, and we've got earnings coming out of some real key players as well. But if we just take a look at what's coming up for today, at 3 p.m. we have JOLTS job openings. This has been consistently falling for a while, and I expect to see the same again. Forecasts are to come in a little bit lower at 7.49. You know, this is where I'm kind of keeping my eye on in terms of US markets at the minute. I'm keeping an eye on the labour market data, because kind of had this kind of weird cycle with the US at the moment, where you've had a lot of weakness coming in on the US dollar in particular. Yields have remained fairly high, so you've got kind of the situation going on with that. And then obviously you have the trade tariff narrative that is being driven by Donald Trump. Now, obviously Trump, the market's trying to price in how serious Trump is about tariffs, in terms of there was initial shock at the amount of tariffs that was put on by Trump, or announced on that Liberation Day. That's what caused that kind of big sell-off in the market. And then after that, the market's just tried to price in that risk of what happens next. Now, Donald Trump openly says that the bigger the tariff, the quicker they are to come and talk to me. That's what his negotiation tactic has been to basically, use tariffs as a negotiation. We know this already, and that's nothing new in the market. But at the same time, the market's trying to price in that potential risk. Now, obviously, we've heard a lot of talk over the past few days that China are willing to come to the table to negotiate with the US. But at the same time, trade tariff deals in history haven't been solved very quickly. They're not things that can be solved overnight. So really speaking, the narrative of the market right now is the fact that they're trying to price in whatever risk is around. Is there still risk that this is going to impact global markets? Absolutely. If we start to see jobs openings continue to decline, if we see CB consumer confidence, which is another big one to look out for this afternoon, if we see that continue to decline, then that really does show you the sentiment of the market. And I think stock markets will only be able to endure so much of a bounce back. If you have a look at TradingView, and we just go down to our stock markets at the moment, NASDAQ just sitting below the daily 50 moving average here. Now, markets dropped significantly, and hedge funds did buy this dip. They did buy this dip. We were 26% down from high to low, and hedge funds did buy this. Now, that's not surprising to me. That's a 26% discount on what they were trading back at the end of 2024, start of 2025. So they're obviously going to buy these dips. But does that necessarily mean that price isn't going to fall further? No, because there's still that risk premium there, right? There's still the risk that China doesn't come to a deal with the US. What about Japan as well? Will Japan make a deal with the US? There's still these big question marks, and we're getting very mixed messages out of the administration. We've got US officials basically saying that, yeah, we're having a good discussion, good negotiations, but then when you hear it from China and Japan's side in particular, they're saying that there's nothing really going on. They've just had kind of preliminary talks. So this trade tariff narrative could continue to drive on. Now, what's going to be interesting is how does it start impacting those kind of macro elements? And obviously, we've already seen a big impact on that. CB consumer confidence being one of those, where we've had continual kind of declines here, right, since November. Really started to kick in, especially as Trump came into administration. The confidence by consumers has really diminished, and that's a potential problem, because that will impact profits. Now, it might not show up this quarter, it might not show up, and I think we discussed this a while back. It won't show in the data straight away, because essentially data is lagging, but it will potentially highlight coming up. So I'm going to be keeping a real close eye on sort of any kind of labour market data, because I think that's going to be the final straw that will crack the move. I think if we start to see significant declines in unemployment, We know the Fed are expecting unemployment to move higher. That's what their expectations are. But if we get anywhere near this 5% level, that spells big trouble. We're not there right now, but let's think about 5-6 months down the line. Where's that going to be? We also have some services PMI coming out of the US a little bit later this week as well. Oh, sorry, next week, that is. But yeah, this is going to be an interesting time for the US dollar. So dollar's still fairly weak right now, even if we look at the kind of fundamental tracker. I've got it as a +3 at the moment. There were some changes in the market which were quite interesting, but it's still not a strong market in terms of the macro outlook either. So I'll keep an eye on the kind of macro breakdown there and see if that fluctuates or changes from the strength meter point of view. So dollar still kind of happy to be on the sell side of that. Swissy actually came from +7 to +3, so that actually declined quite significantly last week. And this kind of shows you the risk sentiment flip. This is what we've been battling with. I feel like every week it's chopping and changing between risk on, risk off. Risk on, Kiwi, Aussie performing pretty well. Risk off, Swiss and yen performing pretty well. It's just we saw a little bit of decline in the Swiss last week, but is that going to continue? I don't know. I would like to see a bit more evidence that we are going to see some Swiss weakness. I mean, a lot of the trends are still a lot of the Swissy pairs are still trading below the daily 50 moving average. Kiwi Swiss here, for instance, pound Swiss here as well. So I don't really want to get on the sort of the back of sort of buying this market too early. So I have just initiated a short, and it's basically off of this 1 hour candlestick close here. So I'm not looking for anything major, but this is what I'm in at the moment. I've took a dollar Swiss short position. I put my stop losses just above these swing highs, and I'm looking to kind of target back down towards the swing lows, right down towards these kind of swing lows down here. So it's about a 1.5 R trade. And what I'm looking at really is, we look at the weekly chart, we are starting to pull back a little bit. Daily chart, we've got that nice sort of pullback starting to initiate again. When I look at the 4 hour chart though, this is where it really got interesting to me, because I would have thought that this area here, this kind of pocket of volume, right, would have had a very large volume coming through this area here. Actually, we can look at that. We can look at that, right? So we'll just pop that across there. Right. We can see that the volume is here. Okay. So, and it's not perfect volume because, this isn't futures data or anything like that. It's not centralized data. So you've got to kind of take it with a little bit of a pinch of salt. But we know when the market consolidates, that's a buildup of buyers and sellers thinking that the market is in a fair value, right? Market then drives lower. We've driven back above. Now, typically that would mean to me that this market is a little bit more bullish. So we will have to be a little bit careful of that. But this 4 hour trend really died, right? It started to kind of create a nice continuation pattern here. If you look at the sort of patterns that we like to look at as well, you have this kind of ascending triangle pattern. I was waiting for the break. I think if we had the breakout here, I think it would have been more ideal to see further upside here for dollar Swiss. But it didn't happen. It actually broke to the downside instead, broke back below that 50 moving average, broke back below all this resistance looking left. So I like the idea of maybe seeing a little bit more downside to this market. I think a lot of retail will probably try and play the upside here because they see that it's oversold, right? Now, just because something's oversold doesn't mean that it can't go further. It just means that there's more chance of a bit of a pullback. But just following usual techniques then, 4-hour trend is pulling back. So this is the secondary phase, looking for the secondary phase to turn into the primary phase. Initially, I'd like to see sort of a break of a swing low. But what I looked at instead was basically the breakout of that trend line support. So we closed below that trend line support. I've entered the position short, looking for a continuation. If we get a new lower low forming, so if the market does break lower, comes back, that's good. You know, I want to see that. If the market changes, so let's say it breaks into new highs here, right, then I will exit the position early, okay, because I don't want to be in a market that is going to start making new higher highs again. Right, guy, I'm also short dollar Swiss and Aussie Swiss. Okay, let's have a look at Aussie Swiss. Let's have a look. Aussie Swiss, I'd still like to the downside as well. I have got a couple of alerts either way. Aussie has been gaining strength on the strength meter, so I haven't necessarily initiated any shorts because it's saying that it's getting stronger. So I want to see that flip first. I actually thought Aussie Swiss might, if we did see that kind of flip in that Swiss sentiment, I thought maybe we would see a move back up into the 55s. We did kind of close very close to these previous swing highs here, so it does show me that momentum is starting to kind of fade a little bit. But yeah, I can see this coming potentially back into the 5200 area. Yeah, especially if we see that driver. Let's say another headline comes out and the US and China haven't made any kind of progress on negotiations, then the market will become more fearful again, right? And I think that will then drive that kind of, you know, another little bit of a move down for these kind of risk assets. Really difficult trading conditions at the moment, I must say. Even though we've had some big moves, I'd say that we're at some really difficult trading conditions right now because the markets are choppy, right? No real conviction in a lot of the moves that we've seen recently. But like I said, I like Swissy at the moment to the downside. So I still, even though the strength meter is kind of pointing at some weakness and suggests that we should be seeing some reversals in the market, I like it. I like it against the US dollar, put it that way. I like it against the dollar. That being said, you know, I have looked at potential reversal ideas. You know, Kiwi is probably the best currency to buy right now, strongest out of the G7 currencies at the moment, +4. I like the idea of potentially buying this. It's just, what do we buy it against now? I've been really looking to short pound because I do believe that the Bank of England are going to start cutting interest rates. But that isn't being felt in the markets at the moment. There's no, there is literally no feelings of that. If we look at the weekly chart here on pounds Kiwi, it's very bullish. You know, tried to break through that low, we didn't. Market's pushing back to the upside here. If we look at the daily chart, this is a very strong market. Okay, very, very strong market. So I don't really want to sell this right now. I want to see price come a lot higher first, you know, maybe up into sort of the 27s, maybe up into the 32s. That would be kind of ideal areas to start looking at potentially shorting this market back up at these kind of swing areas. Don't like the idea of selling this right now. Although, you know, Kiwi being at +7 does put it in prime sort of reversal zone. It's just we haven't really seen the continuation of that momentum there on Kiwi dollars at the moment. So, and I mean, look, the market looks like it is shifting a little bit back towards the yen, right? If we look at sort of dollar yen at the moment, nice strong bearish close yesterday. Looks like we could start seeing a bit more downside here. Same with the Swissy as well. So looking at that, it looks a little bit like the market's favouring more kind of safe havens again. Aussie down, you know, 44 basis points today. Kiwi down 56 basis points. So at the moment, you know, it does look like we are starting to see that. It'll be interesting to see how the US dollar plays into this, the data plays into this. I've only took dollar Swiss short with a very, very small risk. So if we do see big misses to the downside here on the JOLTS job openings, then that could favor a little bit more dollar downside. I think the market's going to look at the CB consumer confidence over anything as well, because the market is sentimentally driven at the moment. It's also driven by how how investors are feeling right now. Also short Kiwi yen, that's about it. I was in silver long but got knocked out. Yeah, I'm still silver long, and it looks like it's kicking off again. I haven't actually looked at the commitment of traders when it comes to silver, to be honest, because I've just been kind of following that sentiment. So they did add into long positions. So the net change was plus 7.7. They decreased their short positions by 1,152 contracts. They also decreased longs as well. So they're getting long, but they're not piling into longs. Right? They're not really adding significant longs. So I've just had a little look at silver up on my other screen there, and it does look like it's started to punch higher again. It was kind of flip-flopping a little bit here. You can see on that hourly chart, let's go to a 15-minute chart, you can see the big swings that we're having here in silver right now. So it does look like this is going to continue. My stop loss has moved from here to here now. That's where my current stop loss is. So we entered down at $30 and 72. So $30. So my entry was around this area here. Right, that's where my entry is. So I'm just kind of following this up. Look at the 50 moving average. Price has stayed fairly supported above that. So if we can remain above that 50 moving average, I'm happy to just kind of continue to trail stops on this. I like the idea of price getting up to 34.50. If it does, be a great area to look at taking some positions off at that point. Obviously, that was where we had that initial kind of big sell-off in the market, although that came after a break below the 32.60s. But even so, nice rejection up at 34.50. So I'd like to see it kind of grind its way higher back to that point. But again, it's going to depend on what happens in the next few days. If we do start to see significant dollar pressure, then I imagine silver could rally. But if that impacts stock markets and stock markets sell off aggressively, then silver and gold would be sold off. And I think looking back, why was silver so heavily impacted? It might be to do with the fact that they want to hold on to gold a little bit more than silver. So I like the idea of being a buyer of silver because it's the cheaper commodity between gold and silver. We talk a lot about the gold-silver ratio and how it was high up at these hundreds, and that was where I was like, we need to, in my opinion, that's where I want to be buying silver prices, which was on the 22nd of April, which is here, right? So usually when you start to see gold, silver fall off, silver gets a decent rally. And we are starting to see that kind of coming into place now. So if that continues to drive towards 95, maybe even to 90, then I expect silver to outperform gold a little bit. Gold looking a little bit choppy up at these 34s at the moment. But, hedge fund, this is probably the best performing asset in a while, right? So hedge funds probably want to hold on to this a little bit more than sort of silver, or investors in general. So do invest, if there was big market panic, do you sell the thing that's high right now, or do you sell the one that's done okay? So if we look at kind of silver's performance throughout 2025, it was up 19%, right? Whereas if we look at gold's performance in 2025, it's up 34%. So which one do you want to liquidate first, right? It's going to be silver, isn't it? So that's what I feel happened here. Instead of liquidating their gold positions, they liquidated their silver positions first, bought back in the dip, and now we're back up into these areas. I think the same would happen again. if we saw a shock to the stock market's fall, I think silver would sell off first. But that to me is a good area to buy. But, you know, like I said, I'm still long at the moment. Stop loss is now at 32.60s. Looking to see if this can continue to kind of trail up. And hopefully that one plays out nicely. I'm still in WTI short. Well, I re-entered WTI short, I should put it that way. I closed my initial position, so I entered short around here. I think it was around the $62, $63 area. I entered short. Price didn't follow through with the price action, so I think it was here we got short, if I remember rightly. I could just look at my history here. Let's just have a quick nose. WTI sell was on the 21st of April. So it might have actually been here that we sold into that. I might have sold into it before that as well. Yeah, sell on the 14th. That's around these highs here. So I've sold into WTI a couple of times unsuccessfully. So I remember this one now because this was breaking out and I was pretty happy with it. And then it came back in. So I exited that position for a very small, I think it was still in the profit a little bit, but yeah, just a slight profit. Market rallied again. I entered another short position here, looking to see if that continuation play didn't. Market rallied up, so I exited that position, and now I've just taken another one because I still feel like oil prices could move lower. So that's the candle I've sold. So current position is here. I'm looking to target back down towards this 57, sort of 50, 57, or maybe even the 56s. Where's my target at the moment? My target is actually 55.50. So it's actually about here, just in these lows there. But I'll monitor this, you know, looking at the 4-hour chart right now, market has made new lows, right? So it could come all the way back up. And then if it goes again, fantastic. If we start breaking into new highs, market's changing conditions. Don't need to be in that position anymore. I will cancel that position there. I mean, I've not really had a good time of trading at the moment. I've actually had, what is that? I mean, I've got open positions that are in profit, but 1, 2, 3, 4, 5, 6, 7, 8, 9. I've actually had 10 losses in a row. I've had 10 losses in a row. I have 2 positions open on silver in profit. Looking for a pound yen short, oil in profit, and I've just opened a dollar Swiss position, which is just around break even at the moment. So I have 3 positions in profit. But you know what I love about those? I've got 10 losses, right? But it all accumulates to less than 1% in loss, which is, I think, good risk management from me. Yeah, that's the point to make, isn't it, right, guy? You can't avoid losses. It's okay. Yeah, you can't avoid losses. What I find I'm really good at, or I'm really brutal at, is getting out when the conditions start to change. That's where I think really that change comes in your head, is if the conditions aren't there anymore, right? The way I see it is, once you get into a position and more candlesticks print, that's new information. That's fresh information that you're getting. Every time data drops, it's fresh information you're getting. Every time the commitment of trader report's released on the Friday, fresh information that you're getting. If that information doesn't suit the narrative of your trade anymore, then get out. You know, my final kind of drawing point for me is if the technicals change, right? So for instance, This short that I took here, my stop loss was here. That would have been a full loss. But I cut it here because it started to break back above that breakout there. So actually that was a very small profitable trade. You know, this one here, I cut it early because it changed trend down in the lower levels here. And I was like, it shouldn't do that if the momentum was going to continue lower, right? That didn't happen. We came up into these highs. We broke that trend line. I entered short again in line with my strategy. We've made new lows. And look, market tried to make new higher highs, continued to fail. Fantastic, great, keep it on. Markets then pushed into profit. Fantastic, keep it on. But let's say OPEC tomorrow announced that they're going to cut output, right? They're not doing that right now. You know, on the 21st, I believe it was, they considered increasing output. So that means there's going to be more supply of oil in the market. There's also concerns of slowing US economy, which means there's less demand for oil, which is why I'm still trying to play the short side of this right now. So, you know, if we get positive headlines on China, you can see when we get that positive headline on China, the market rallies. So if we do get positivity, then I know that I should probably exit this oil position because the narrative would be shifting. At the moment, from my kind of like mapping here of the fundamentals, if we look at what I'm doing on oil, really, it's just kind of mapping how each day has reacted to certain information. So, you know, Trump announcing drill baby drill was a bearish day, and we kind of saw that bearish sell-off come from that. Markets then found a little bit of support, right? Then we had Liberation Day, which was pretty nothing day for oil until Thursday, where it really digested how that would impact the markets. The Friday, the 4th, we had OPEC increasing production. If they increase production, that means there'll be more supply of oil, right? Less demand, more barrels in circulation. Prices then drove lower, okay? We then had the 90-day pause, which is this strong reversal candlestick here. If I just move this one out of the way for now. That strong reversal. So that was positive for oil prices. That was then backed up by headlines for China ready to talk to the US. Then we had things that were starting to turn the market a little bit, right? So we had on this day here, oops, don't want to do that. I wanted to get rid of this arrow here. That day here, OPEC considered increase in output. So that's why we saw that break in trend again. And that's why I was like, okay, I like this now, because if OPEC and OPEC nations are going to start increasing that oil supply, then usually that would be met with lower oil prices. So that's why I liked the continuation of the trade there. Okay, now we can then use this as really good information of what's that going forward. You know, Inno's projects there, big shout out to Inno. Everyone can trade, everyone can lose. Yeah. Yeah, not everyone can take the losers, and that's why a lot of people leave the game, right? Because they can't take the losers. But yeah, concerns over a slowing US economy as well is starting to see prices drive lower again. So we can then use this oil information there to interpret what we could talk about next. What's that going to mean about inflation in the US? That means probably lower inflation in the US, right? Will it impact core? No. But, it could be better for US consumers with lower oil prices. This could be, again, a way of Trump trying to balance that trade tariff narrative by creating lower oil prices. What countries or what nations benefit from lower oil? Japan, right? Because Japan are big importers of oil. Let's actually see. I want to see if we can find out. Let's just type in. Let's say, who are the biggest importers of oil. Let's just see what comes up. So we got China, the United States. Well, the United States produce oil as well as import oil because they just need so much of it. India, South Korea. Let's see where Japan is on that list, because I know Japan's quite high. So Japan is actually the 5th largest crude oil importer. This is information of 2023 though, so I imagine that would be fairly similar. South Korea, okay, I don't really trade the Korean won, but maybe it's something that you could look into. Don't really trade Indian currencies either. The rupee, I think it is, isn't it, in India? Don't really trade India's currency, but obviously it could impact US dollar as well as China. So, but out of the kind of bigger nations there, you've got Germany as well. It could impact. So Germany, big oil importers as well, could potentially help the euro, right? So to me, this is where I'm looking at my attention though. Japan. Why am I looking at Japan as well though? Because Japan have got other things going on. We actually have a look at some of the data last week out of Japan. Japan are on a bank holiday at the moment, so there's not any trading going on in the Asia session really. But if we look at Tokyo core CPI last week, that rose to 3.4%, up from 2.4%, beating forecasts 3.2% as well. So are Japan really edging closer to that potential rate hike? That's what we need to look at. Obviously this week we have a BOJ interest rate decision. So, Thursday we might see this move from 0.5 to 0.75%. A lot of the talk at the moment is they're not going to change anything right now. Again, worried about the sort of situation between, a trade negotiation deal with the US. But at the same time, oil prices coming in lower will really help Japan's imports being cheaper. Basically, they can make a little bit more of a trade surplus there. So Japanese yen could get a little bit stronger. So if that's the case, where we've seen that kind of fragility, that weakness, obviously pound, I like the idea of shorting pound because I think that they've mispriced pound at the moment. I think the market is mispricing what's going on in the UK right now. So looking at pound yen, I liked the idea of being short up at the 194.50s. Market's since fallen. We broke 189.50, which kind of put me off getting short because we started to kind of break trend there from a daily chart point of view. Again, from the 4-hour chart, you can see we had this sort of consolidation pattern. Market broke out higher, but look at that now. That breakout there is starting to point a little bit lower. So I like the idea of being on the short side of this. I was considering a short on the hourly chart, but on my other charts, it doesn't show a close below there. So I may have missed a short opportunity on pound yen, but there'll be another one. What we can look for is, do we get significant closes below these lows? If we do, then the sentiment could be changing, and we could be looking for some pound yen downside. The other market, like I said, I do like is euro pound. Euro, I think, is going to continue to benefit from the sort of recent goings on over in Europe and just kind of what's happened generally in the US. I think what we're starting to see is investors move out of move out of the US and going into European markets. So I do like the idea of euro pound moving high. If we look at the weekly chart, we had that consolidation down here for a number of months. Strong conviction, breakout to the upside, slow kind of pull back over the last 3 weeks or so. So I like the idea of being long here. We broke significant highs, right? Even broke this high back in early stage of 2024. So I like the idea of seeing a rebound here. First target, I'm going to look for 86 80s, potentially 87s. If we break that, I wouldn't be surprised if we saw 2023 highs being tested at some point. If we look at the let's just compare and we can I'm going to just compare the difference in yields. Okay, that hasn't done what I wanted it to do. EU 10-year yield. Yeah, right. EU 10-year minus GB 10-year. Okay, and that gives us essentially euro pound, right? If we go compare euro pound, let's just use this one, right? Okay, so you see the relationship between the bonds there, right? And we've had that big spike up in euro pound, but that came after the EU 10-year bond started to spike higher. We've had a little bit of downside in those, but look at the past sort of 3 weeks, we're starting to see that bullishness come back into play again. So I like the idea of euro pound following that similar path, seeing if it can continue to kind of push up in line with the bond yields as well. So, you know, if we look at sort of how Europe has been playing out recently anyway, we had that strong spike up, which obviously flooded the market with euros then, or at least the sentiment of buying into Europe. We've come and topped up around that kind of 2.9% area, but I still like the idea of this moving to the upside. ECB have been a little bit cautious in tone. I mean, Francine Lagarde was a little bit cautious in her tone recently. Again, they want to see some kind of deal with the US, but at the same time, you know, we could see a short-term bounce in bond yields. And if we do, then I want to be buying euros, and I want to be buying them against currencies which I feel could be a little bit weaker, pound being one of those. So at the moment, there's no setup for me. I'm waiting. You know, the market has been kind of trending lower. Maybe a break of this kind of trend line resistance. But ultimately, I'd like to see some kind of 4-hour change in trend. If the market kind of comes down, changes trend, kind of breaks out, I'd be happier to start going long in that market, and see if we can get some kind of moves back up into these kind of 87s. So keep an eye on that one. Let's have a quick flick over to pound yen. Like I said, I do still like this market to the downside. What I would like to see is some kind of conviction in the breakout here. So starting to see a bit of a spike up after it came and tested in at this kind of 190.50 area. So if we can kind of break that, then I think pound yen could trade lower. But we'll see. We've got 10 minutes. We've got some US data coming up. Maybe that will be the thing that kind of shifts markets at the moment. You can see oil still starting to decline. Silver giving back some of those early kind of pushes. Again, it's kind of really flip-flopping here. It doesn't really know what direction to pick at the moment, silver. Dollar Swiss just hanging on a little bit. So I'll see what happens in about 10 minutes and see if we get any kind of big pushes on the dollar. With the JOLTS job openings. So we shall see how that one plays out. Other than that, just kind of taking a look at some of the commitment of traders reports, just kind of having a look at general sentiment at the minute. We are starting to see some kind of extremes being met. Like I said, the dollar is getting very close to a 52-week high, 52-week low. So keep an eye on that, because when we do usually see heavy sentiment pushing, we can see reversals. You know, that was very similar to what we were looking at in September, just the opposite way around, right? So when we look at the reports in a little bit more detail, just open these up, right? What we were looking at in September was the fact that hedge funds were reaching an extreme long position, right? Prices of the US dollar index had dropped significantly. Hedge funds were buying into that move and they'd reached an extreme. So I was looking for the turning point to see a rally That's exactly what we had. That was with the euro dollar drop to the downside. Well, all sort of dollar pairs just completely reversed at that point. We then went to an extreme low, and look what happened. Dollar has continued to sort of trade off there. We haven't come back into an extreme just yet. So, you know, we are kind of getting very close to these extremes though at the moment. So we will see what happens with the US dollar. We're also seeing that across other markets though. So if we look at CAD, right, look at this extreme on CAD. Hedge funds are extremely long the Canadian dollar at the moment, which is quite interesting because they just went through a very historic event. They've just finished their latest round of voting for the new Prime Minister. Mark Carney is now the Liberal Party leader. If you're familiar, if that name rings a bell, well, Mark Carney used to be the Bank of England governor, right? So that's probably why it rings a bell a little bit. What's quite interesting though is that before he came along, obviously Justin Trudeau was in his current position, leader of the Liberal Party as well. Justin Trudeau was, and their ratings were shocking. And then Mark Carney comes in, does a speech about how, you know, President Trump, you know, is not going to take Canada, and we're going to put Canada first, and we're going to look after Canadians, and and suddenly he goes and wins the election. So, you know, really interesting to see what's going to play out here in Canada. Obviously, Donald Trump wants Canadian resources, right? They have untapped natural resources. Obviously, the biggest one is oil. And this is why Trump is very aggressive with his tone and language with Canada. So I'll be interested to see how this does develop going forward. Carney will take more of a economic outlook approach rather than just kind of being sort of saying popular statements. So it'd be interesting to see how he gets on with negotiations with President Trump, whether he will take that on aggressively. You know, if we think about it, the language from Carney has been fairly aggressive towards Trump, and he's saying that, you know, President Trump, look, there's a quote here actually, President Trump is trying to break us so that America can own us. That will never happen. So I think there's going to be a bit of a button of heads here between Carney and Trump, and that spells uncertainty. And when you get uncertainty in a market, you can see some fluctuations. Looking at dollar CAD right now, look at the position in here. We dropped down, you know, after that aggressive sell-off, but now we're starting to see similar levels to those here as what we did back in August, which was that high back up into the 139s here, which we sold into that. So yeah, very interesting developments here. You know, if we look at the current trader reports, just open these out again. Right, the only thing I would say about this, and I kind of made this comment on a short video I did recently as well, is that we're not really at anywhere significant. So if I just kind of put on the major levels, sort of 74, 72, then if we go lower, you got the 0.7, 0.68 was a big turning point in the market. Although we're reaching sort of a similar extreme as to that as what we saw in sort of August, September of 2024, we're not really at an area of resistance yet. You know, if I look at previously, we're at that 7,400 level. It was an area of resistance and support in the past. Market then double tops there, and we saw that sell-off. Here right now, we're trading above the 72s. 73s aren't really a level of resistance either. So I would be more inclined to see this go further, see that 0.74 handle, and then reach maybe an extreme that we haven't seen for a little bit longer. So maybe this kind of early 2024 level, and then maybe look for that kind of aggressive move. So we'll keep an eye on this as well, because although, you know, I do feel like maybe we could get a little bit of a move higher, we have to look at other factors as well. Oil prices are moving lower. CADS usually benefits if oil's bullish. It's not, so it could weaken from that kind of standpoint. If we do see Carney and Trump go at it as well, then, you know, Canada's going to have to look elsewhere for trade. And that's big, right? Because CADS, I think CAD exports, make up 75% to the US. So if they've got to find new trade partners, they've got to make up 75% worth of exports there. So that is a bit, they're going to need to deal with the US regardless. And I think that's what Trump's playing on. But I don't know how that's going to impact CAD going forward. Personally, I think it could be quite bearish for the Canadian dollar. But, you know, at the positioning at the moment is hedge funds are getting long. You know, they reached the sort of short extreme towards these kind of areas here. This is where we were talking about a bit of a reversal in the market. We didn't really see it. Price continued to drive until that, obviously, that kind of big reversal day came with regards to tariffs. And then we started to see that kind of move to the upside. You know, here was the short extreme that we were looking at as well, saying that we should be looking for longs. That came in, but it didn't last very long, you know, before that big turning point. So yeah, I think CAD's going to be an interesting one to watch, but I just wanted to point out to your attention that they are coming into those kind of highs. The yen's already there. This is just going to get stronger, I think. It will turn eventually, but is it going to be this week? I don't know. Maybe the BOJ announcing no cuts might shock the market, might reprice some of this buy-in of the Japanese yen. We can also see kind of euro heading a little bit to those extremes as well. But really speaking, the only extremes I see that are worth kind of noting is, you know, US dollars coming into an extreme with regards to a short extreme. So it is starting to become a little bit more oversold. CAD a little bit on the overbought side, yen definitely on the overbought side. So those markets are on my radar for some big changes if we do get them, essentially. Let's have a look at the data then. So Jolt's job openings down. And down significantly. 7.19 reading. Forecast was 7.49, so that is a beat of forecast. We've also seen a revision down on the previous. Not really a big reaction in the market at the moment. Not from currencies anyway. I'm just looking at dollar Swiss. Not a big reaction there. CB consumer confidence coming in at 86. We did get a revised higher on the previous number, but we did get an 86 reading. So let's go see how stocks are taking that news. Let's go and have a little look at the NASDAQ. I don't know whether the NASDAQ will feed into this consumer confidence data, considering the fact that we do have big earnings coming up this week. Probably not the reaction that was expected. Let's have a look at small caps. Russell's starting to feel it a little bit more there. Again, who usually gets hit first in any type of recession? Small caps, right? Small businesses. They're the ones that get hit first. And you can see that in the pricing, really. Look at this, look at the, if we compare that to kind of the moves on the NASDAQ, the S&P 500 and the Dow, Russell really struggling to gain much ground, right? And that's because nobody in these environments wants to really invest in smaller companies. Trump helps the Liberals win that election. The ruling party was set to lose by a landslide. Well, yeah, I mean, the current ruling party there was the Liberal Party, wasn't it? And they were set to lose to the Conservatives. And yeah, I think the fact that kind of came out and said those things that he said, it really kind of turned it around for them. The yen will be extremely short, meaning yen will go down. I always get confused with it. Yeah, so yen futures. So basically, if the yen futures are overbought, it means that we're looking to potentially see a reversal in that. So think of it as like just think of it as a souped up RSI, right? So if we look at Japanese yen futures, right, if you were looking at that as an RSI indicator, right, just really kind of think of it in that kind of terminology, you'd be like, okay, that is overbought now. What do we typically see in that environment? We can see some sell-off, right? That's the way I'm kind of looking at Japanese yen. And importantly as well, we are at big levels, right? This is what I think you've got to use everything in your kind of tool belt when you're looking at committing a trader reports. It's not just about, okay, they're overbought, but that doesn't mean that price is going to change, okay? Because they're buying yen for a good reason. You know, why are they buying yen? Well, it's because interest rates are going up, so they want to try and buy the yen. It's almost like the reverse of the carry trade, right? This whole sort of situation here was what's known as the carry trade. So this is just inverse dollar yen, right? So dollar yen is inverse to Japanese yen futures. So if it really helps, what you can do is invert the chart on your charts. So I would be looking at sells on Japanese yen. So that means dollar yen upside. Okay. Yeah, so that means yen pairs would go up. Yeah, that means yen pairs would go up because it's the term currency, not the base currency. Yeah, so if you see yen futures rise, that's dollar yen down, right? If you see yen futures fall, that's dollar yen up. No, yes, dollar yen up. Confusing myself now. Just keeping an eye. I just saw pound yen kind of flick a little bit higher there. Dollar Swiss also starting to turn a little bit higher off of that news. Let's see what's being reported around. Okay, it'll be interesting. Dollar's getting a little bit of a bid from it. We're also seeing a little bit of a buy coming in on pound yen. Just have a little look at that hourly chart. Starting to give back some of those earlier losses there. Let's go and have a little look at euro. See how euro is positioning into this. A little bit of downside there. Same with the pound. Aussie and Kiwi getting hit by this a little bit. So it'd be interesting to see how this maps out, you know. Because I would take that data as the fact that that's kind of rolling into labour market data now, you know, especially if job openings are falling drastically. I would be more on the sell side of US dollars still. So we'll see how this one kind of continues to play out there. Right then, guys, we've been going for an hour and a little bit. I'm going to probably call it there. Yeah, like I said, last stream is going to be on Thursday. So I hope you can join me for that. I might go a little bit longer, I might go a couple of hours, just because it's the last one. We can talk about all things markets. You know, any questions you have, let me know. But yeah, I look forward to catching you all then, guys. As always, appreciate you turning up and having a chat with me here. Let's see how the market plays out for the rest of the week. I'm still going to hold my silver positions. I'm going to hold dollar Swiss short. See if this one can play lower. Again, if I get any kind of breaks in trends, I'll happily cut this early. And yeah, see how this one kind of plays out. So thank you, guys. Appreciate you all as usual. If you could leave the thumbs up, I would appreciate that, even though it doesn't really necessarily matter to me anymore, but it still matters to Blueberry. So you know, if you can give the thumbs up there, I'd appreciate it. So thank you to everyone, and I'll catch you on Thursday.